Hello, it's Mark Albert. Thanks for being with me today. Today I thought it'd be a good idea we get together just briefly because the Bank of Canada made an announcement this morning concerning the interest rates. And I thought we would say what that is and the reasons why they did that and a little bit towards the future in terms of what we can expect for interest rates. So today they made an announcement, today being December 5th, 2018. And in fact, what they announced was they were going to keep the rates the same. So if you remember back in October they made an announcement to increase it from 1.5% to 1.75, and they're going to just maintain it. So the Bank of Canada, it's important that we realize that they increased the rates 5 times since September or the summer of 2017. And so that's been a pretty steady increase. And what we were expecting, based on last October's announcement, last October, when they announced just 2 months ago, they were really excited about the economy, the growth, and it was like, we're going to increase this rate. They were maybe 3 times in fairly quick succession order, based on what they saw. And now, 2 months after that, they say, well, no, we're going to maintain it. We're not going to increase it at all. Now, we're not sure what's going to happen beyond that, but let me share the reasons why, and then maybe what we can expect in the next 3 months from the Bank of Canada. So some of the reasons why they maintain it. Well, what they said was, basically, the Canadian economy, they kind of like put a negative wing on that. And not that it was all doom and gloom, but they had some negative thoughts on the matter. Of course, we know the GM plant probably going to be shutting down here in Oshawa. Oil, there's big issues going on with oil. Looking at the housing market, consumer spending, things like that. And they're just a little bit on the negative side. All right. They also felt a little bit more negative on the global economy compared to how they felt just 2 months ago. All right. And that's important to know. They're pretty excited about where the Canadian economy, the global economy is going just 2 months ago. Now it's a little bit more negative, so they're maintaining the rate. Steep decline in Canadian oil. So you'll notice a couple months ago it wasn't like that, but what's going on right now in Alberta is just crazy how they're struggling financially in terms of selling their oil, competing against the U.S. market and elsewhere. So that's a real big concern in the Canadian economy. So that, I think, impacted it a little bit. And uncertainty over business investment. That's an issue. You know, companies investing in Canada, and they just had some uncertainty in that area. And then the U.S. China trade showdown. So here we got the 2 biggest global economies in the world, right? They're both trying to work out an agreement. Things aren't, as smooth you can imagine. We saw what happened when they were trying to negotiate NAFTA with the U.S. That's just something there. So based on these variables, they thought, we're just going to maintain the rate. So what we got coming up is January 9, which is just less than a month from now. The Bank of Canada is going to make another announcement concerning interest rate. And then March 6. So some economists think that they're going to increase their rates January. And some others are thinking, no, I don't think so. It's just a month from now based on what this is going on. I don't think they're going to in January. So that means they'll probably delay it till March, but more likely they'll increase it then unless there's a major turn in the economy. That's what I think anyway, and I'm not an economist. But so what does this mean for us if you're house searching? Well, if you've recently talked to a mortgage agent, mortgage broker, and they told you how much house you can qualify for based on current rates, then you don't have to worry about it. You just keep moving on. The rates are there's going to be some stability in terms of the rates for qualifying for a mortgage. We're going to see how this impacts over the next month. The Bank of Canada probably have a little bit more data on housing, and let's see how housing sales do over the winter, and that may impact what they do, particularly in March, the interest rate hike. So anyways, there's some thoughts for us. Some people are pretty excited that the rates are going to be maintained. And we'll see where it goes, and look forward to sharing back in January on the next interest rate announcement. Listen, have a great day. Thank you so much for being with me. Please feel free to subscribe here if you want to get the next update, and click on the bell as well so you get the next update. Thank you. Have a wonderful day. Take care.